great to see you. Hi, guys.
So it's the explosion of private credit. You see a big opportunity here. Why?
Absolutely. So if you think about just generally what the economy needs, it's reliable liquidity. Bank failures now, we're seeing capital constraints. Somebody needs to come in and fill that void. But at the end of the day, it's what does the investor want and what does the investor need? And what they need is reliable yield. And it's better if it's floating rate. So what people probably don't appreciate most about private credit, it's a floating rate instrument. So for the last 16 months, it's been meaningfully outperforming while most traditional fixed income instruments are not doing what they're supposed to be doing for the investor.
We hear this from KKR, we hear this from Blackstone, we hear this from TCW. Everyone's in the private credit game now. How do you distinguish yourself? Or is it just there's so much demand?
It's a huge addressable market. I think that there's more equity looking for capital solutions in the credit market than there's dollars available. So there's plenty of room for continued growth. We've been doing it longer than anybody. So having a 30-year track record built up over time through cycles, I think that's the big differentiator. But as this market continues to perform in volatile markets, I think you're going to see more capital flowing, which is not necessarily a bad thing.
And who are you primarily lending to?
You know, private credit is a huge global market. So we lend to the corporate markets. That could be private equity sponsors, family-owned businesses, et cetera, public companies from time to time. In the real estate market, we're a large private lender to institutional owners of equity. In the infrastructure markets, very large private lending business into the global infra market. So I think as the market begins to see more of this narrow view of lending to private equity sponsors will somewhat get turned on its head, and people will realize the value of private credit globally across a whole host of asset classes.
When you think about the silos that are going to need the liquidity, is real estate at the top?
Real estate is probably the tip of the spear right now, and that's a function of the fact that those assets are going into this crisis more leveraged. They've been served predominantly by the banks, which will be pulling back on capital availability. So, yeah, I think real estate for sure, but right now we're having a liquidity issue more than we're having a credit issue. Private credit is going to be a big part of the solution here, bringing capital into some of these assets when the equity markets are a little challenged to find their footing.